good morning, everyone. Akili here from CTL again, and we're gonna be talking about three different topics today. However, I believe I'm probably gonna spread them out into three different videos, right? The first topic is momentum, and an understanding of market momentum is going to make you so much more proficient in your execution of trades and the understanding of a particular concept in momentum called perfect entry, right? So, how many of you guys has ever tried to get into a trade, but the entry that you took probably wasn't the best one? The market somehow came back, it swung back, and it's what it was able to take out your entry point, right? It was able to put you out of profits, and sometimes it's just 10 seconds you're out of profit for, but that 10 seconds causes you to lose that particular trade. So I wanted to cover that topic. We're going to deal with momentum and we're going to deal with perfect entry. Okay, so let's go. I'm on trading view right now. My time is set to 5 minutes. My candles are set to 5 minutes. We are looking at NZD USD and what seems to be a consolidation. How do we know it's a consolidation, guys? Right? Our high points are in common. They have very they are in common, and our low points, they are also in common. So our low points and high points are in common, meaning that if I were to draw a line, I'm not going to do it right now, but hypothetically speaking, a lot of the high points are around the same regions, right? You see that? And if I were to bring this down, a lot of the low points are around the same regions. The market isn't uptrending or downtrending. It's not moving in any particular direction. But what it is doing is it has this kind of sideward W M pattern motion. And that's how we know it's a consolidation. So let's talk about it. Last week we discussed the stochastic and what the stochastic does, right? It was part of our three indicator strategy that we utilized last week, but let's elaborate directly on the stochastic because it helps so much with momentum. Now, the stochastic shows us vividly utilizing its two lines on the inside. These two lines push in, push out, and inside of the band. Outside and inside, outside and inside, outside and inside, right? We know that when the line goes out, the market is about to restructure or rebalance itself in whatever motion it's making. So it pushes back in. We would generally attempt to take a trade somewhere on the outside in anticipation for a motion back in. But that leaves us with a whole lot of space. Sometimes it's two candles on the outside. I mean, look at this, three candles. Look at this here. You could have taken a trade on any one of these candles, right? And a lot of them would have not been fruitful. These would have been losing trades. What do you do? How do you know when to take the entry in a case like this? Because you can't just take it anywhere on the outside. And let me show you guys the trick to this. What you want to do is you want to take the trade exactly upon the point that the stochastics bands intersects with the top and bottom band of the stochastic. So these two lines inside of the stochastic at the exact point that they intercept or they intersect the top or the bottom band of the stochastic, when they pass through it, when they cut through it, that would be your perfect entry. And I want to make this quick. I want to make it precise. Let me point it out for you guys. Let me see if I can illustrate it, right? Look at this very instant. Look at that cut, right? Let's look at the matching up area for that cut. Right? You see the selling power there at the cut. We're pointing out the areas where there was re-entry, right? So there was re-entry here. Look at the flow. Look at what happened directly after. Look at that. So we're looking at the areas where there were re-entry, where there is a touching, there's an intersection between the lines of the band and the top and the bottom line. And look at how that's happening. Boom. Absolutely amazing. Absolutely awesome. This one is a little bit off. Nice. Touch right there, and that's exactly the area that the market sell. Touch right there, that's exactly the selling area. Touch right there, and directly selling after. And vice versa, it's the same thing with the buy, right? Let me switch up. Let me switch it up a little bit, and I'm gonna show you guys. Look what happened here. This is where there was an intersection. That's where they touched. Look at what, I want to make sure and put them in line. Look at what directly happened. Complete buying motion, right? We could see it again here at this point where it touches. Complete buying motion. Isn't that amazing? That you can anticipate exactly where to place your entries for your trades just by looking at where the bands, or sorry, where the lines of your stochastic directly intercepts with the stochastics bands, right? So with that being said, guys, I want you guys to have a pleasant day. Expect two more in these. We're going to have some further analysis to do, but I really want you guys to practice this, and we're gonna have a fun time, right? So see you guys again later. Again, it's Akili from CTL. Hope you guys have a great day.